Welcome to the Stocks with Josh show. Today was a red hot trading day in the markets. Very strong intraday moves up and down. With this big move that we've gotten over the last week, we are now 17% down for the last 12 months on the S&P 500. Really, there's not much doom and gloom with that number. I want to make some basic market observations for you guys today. The current trend of the markets is absolutely confirmed bearish. It is bearish because it's made a series of lower lows and lower highs. They began in January of 2022, and it's run that way all the way till today. We have an established trend line that the market has yet to break. The market today pushed right up to that trend line. It gave it a nice little hello kiss. Monday, the markets are going to be closed to celebrate Martin Luther King, and Tuesday, we shall see if these markets can break above and break over and close that heavy, long line of resistance that beat us down all of 2022. If we rally Tuesday and break that line, what does that mean? Is the recession canceled? I wish I could cancel a recession the way that people get canceled for speaking their mind today. How do you boycott the recession? Well, all the big corporations, I guess they're just going to have to call up the people they recently let go and say, hey man, just kidding. Go on, get back to work. Everything's fine. It was a joke. I want you guys to take a quick look at the companies that have been laying people off for all of 2022 and have said they're going to have a ton of layoffs in 2023. DirecTV, they laid off 10%. Amazon plans to cut 18,000 jobs. Salesforce, 7,000. Vimeo, 11% in 2023. Already 6% in 2022. Goldman Sachs, the money makers themselves, have already planning on cutting 8%. Ford Motor Company, Stitch Fix, 20%. DoorDash, 6%. Meta, 13%. Zillow, 5%. Peloton, 12%. Snapchat, 20%. Netflix, Nirvana, all cutting jobs. Coinbase, 18%. Robinhood, 9%. Shopify, 11%. Elon Musk, he thought it was a competition. He cut 50% of Twitter. This is just to name a few. The cuts have been deep and they've only just begun. They're going to continue planned all through 2023. So who is going to let those people know that the recession has been canceled? The markets are back on a bull run? Well, today I'm going to look at the bearish technicals and the bullish technicals because we can't get stuck in one headspace with the markets. It's not going to work. Say hi in the comments. Let me know if you're feeling bullish or bearish right now. Thank you for hitting the like. Don't trade alone in 2023. Hit the subscribe and the all notifications YouTube bell. Remember that anything I say is not a suggestion for you guys to buy, sell, or hold. I'm just sharing with you what I'm doing with my money. There are scammers in the comment section using my picture and my name. They're trying to get you to reach out to them on WhatsApp, Telegram, and Instagram, but you can only find me on the YouTube app and the Moomoo app. We're going to be looking at Amazon today, Jeff Bezos' cash printing machine, and see whether it's time to buy or sell moving into the earnings, which are just ahead of us on February 2nd. So we have a little time, and today Amazon had a nice little pop up, and it may be nearing a breakout zone. I'm going to touch on the fundamentals and briefly look at the charts with you guys today. I want you to watch to the very end. I'm going to give you a bullish scenario for the markets so that we can keep those level heads and not get stuck in the bear trap. All right, let's look at Amazon. Is it a buy, hold, or sell? Well, there are 46 analysts who cover it, and 42 are giving it a buy rating. 2 of them say hold, and 2 of them say sell. But overwhelmingly, it's called a buy by Wall Street. The average price target for Amazon in the next 12 months is $165, with a median target being $135. If we got that move to $135, that would be a 65% gain from our recent low. And if we were to get back to $165, that would be a 100% gain. That's kind of nice to think about. That's the kind of investment that you're not worrying about sleeping at night, wondering, is it going to go to zero? These guys are a solid blue chip company, and perhaps they're getting near to be a value investment. But what is the PE? Remember, in a recession, you want to buy PE, not necessarily price. Amazon has a PE of 84.59 compared to other big tech companies of 24, or Apple at 22. Ouch, that's pretty high. Why, though, is their PE so high? Because of their wide-scale expansion Amazon has historically had a much higher PE than the rest of big tech. In the case of Amazon, their PE is probably misleading. They had a PE of 528 in 2015 and 76.5 in 2020. Amazon is definitely treated like a growth tech company. They have a very high PE. They spend more money on more efficient methods of profit growing. In addition to outpacing traditional brick and mortar retailers, Amazon is not afraid of spending bucks on a mixture of high profit service-based companies to grow their margin. So has Amazon come down enough to overlook that crazy PE? It hit a recent low of $83, and that was a 56% price drop from the 2021 highs. Was it enough? I want to point out that Amazon gave the market a clear double top back in 2021, signaling that the climb was over. Never overlook the technicals, my friends. They are definitely speaking to you. When it came back to $83, it bounced off a historic support line that it's held since 2018. And I'm going to get right to where I think this stock is headed before or after earnings. It looks like it wants to hit the 100 to 102 and maybe even as high as 105.9 area, which is also a historic area of resistance. Friday's trading also ended on a resistance line of 98, which has also served as resistance in the past. A true support below is at $90.90. Amazon may be going on a bigger move to retest the 115 range. And I'm going to break that down a bit more, as well as give a potential bullish case for the markets. But before I do, a quick station break for my affiliate, the Moomoo Investment app. Click the link in the top pinned comment and get a new exchange for 2023 that is currently offering 15 free stock and a chance at $60,000 sweepstake. Moomoo is a licensed and insured exchange out of Palo Alto, California. They've got the free level 2 data, a stock screener, and 8 different order types with advanced stop loss tools to protect capital and lock in profits. I use them every day. You got to use those stop losses. There is a Stocks with Josh community page on the Moomoo app and a chat group called Stock Josh Family. It's an absolutely on fire chat. Family, throw a heart in the comments for me. I chose the heart as my emoji on YouTube for 2 reasons. It takes relationships with others to grow as a trader. You need to learn as a community. And it takes courage to do what we do. To attempt to master the Wall Street magic money printer. Let me tell you, that takes heart. So let me see some hearts in the comments if that's true. Okay, guys, let's talk about gross profits. We compared Apple's and Amazon's PE, but let's compare their gross margins. Apple has a 42% gross margin, while Amazon has a 44.7%. And for basically a retail competitor, that's pretty good. That's another reason why these guys are viewed differently. They're not selling software. They're selling everyday goods, but with exceptional volume. I want to just mention that they have a book value per share of $13.30. Just a reminder that when you buy this stock, you're buying growth and potential. Never lose sight of that. The average annual growth rate for the last 10 years is a shocking 28%. That beats companies like Google that averaged around 25%. And their average earning per share for the last decade has been a staggering 41%. So Amazon, on a lot of metrics, is a best-in-class performer. You have to ignore the PE for Amazon and instead look at the price to sales ratio, which is around 1.9. Typically under 2 is reasonably bullish. The S&P 500 is on average 1.7, so they are still a bit high. But they are more in line with the metrics there. Even though Amazon has a great track record for the last decade, and they may be nearing a more fair value, I could not call it cheap just yet. I'm neutral on Amazon for the next 3 months. I would prefer to go long at the $78 range, but I'm bullish on trading Amazon till the end of this month. I'm in a call currently and I'm up about 90%. I got into that with the folks over on the Moomoo chat group. I'm anticipating more upside for Amazon all the way up to earnings. Now, I don't want you guys to FOMO because there's going to be pullbacks between now and the end of this month. And for goodness sakes, I'm going to remind you guys to use a stop loss. I hear it all the time in the chat group. I didn't have a stop loss. I lost a little bit of money. There's no reason to lose any money if you've got the right plan in place. Please use a stop loss. I will not be holding any swing trade on Amazon through earnings. It's not the time for those kinds of plays. Amazon gave the market a missed bag in 2022. They missed more often than they beat, and so there's just too much high risk for me. I'm looking to trade the run-up. That's how I'm playing Amazon, but let me know in the comment section what you guys are going to do with Amazon. If you own it, If you're trading it, if you're going to hold it after earnings, tell me in the comments. Okay, guys, let's touch base on the bullish narrative for the markets. If they keep climbing, how high could they go? Well, we would have to go back and break over the 4,100 area, which we have already failed and gotten a confirmed double top in just the last couple weeks. Some people have called these markets all the way to the 4,200 range. With today's move, we did get a close over the 200-day moving average, which is bull territory. This has happened twice before, and both times we got rejected in just a couple days. My view is that we have resistance at 40.30, and it's very possible that we could hit that and reverse. But we should have some market clarity by the end of next week if we continue to follow this bullish trend. That's what I'm watching carefully. Now, last call to hit the like. 20,000 views per video sometimes, but only 500 likes. Don't be stingy with the love. Hit the like, especially if you got to the end. Subscribe and the notification bell. Peace and blessings, my friends. We'll see you, soldiers of the chat, tomorrow.